Hello everybody, I'm Giuseppe Basile, also known as the FibStalker. Thanks for watching this video. This is the weekend video review part 1. Today is April the 8th, 2018, and it's 9 p.m. EST time in Toronto. This video is part of the FibStalker Analysis and Trading Service. So as usual, I ask you to pause and read and accept the disclaimer if you're not done that yet. Please go ahead, and after that I'm going to start the review. So let's start from the SP 500 here. As you know, this market is still moving laterally on a very large time frame here, and it is possible for this market to continue lower here. We had a sequence of extension here initially from highs to lows. The market went into that first target, and we could actually reuse this anchor here, and that's where the market has stopped last week. Okay, so it is possible still for this market to continue lower into that first target 24.98. That's where we could see this market move into. Dollar index, important here, the dollar index has printed relatively higher highs here on the daily, not yet on the weekly, and you know, the market was very extended in the last 2 weeks, this market, and it might be completing that transition now and rotation. So there is a level excuse me, that I would watch here. Is this is the extension longer that's traded already on Friday, and it could come into play again today. So if we see this market holding this level here, then that's where we are going to you know, continue our move higher in the dollar index and lower in the euro and other majors as well. If that does not happen, then we are going to look at a full 50% retrace here on the daily time frame. That's the 89.41.40 level. So we'll see what happens at the beginning of the week. Gold has moved lower here, but as you can see, still on top of the 1311 here, $1,311. And of course, depending on how the dollar index is gonna move, is gonna move higher. This level is going to be retested, and eventually, as we said last week, that could be pierced and market moving to the 1263. Silver, same situation here as we have always mentioned. This market is currently weaker than the dollar. It's trading along with the dollar, and it has a setup at 17 here into 1580. And there's also a larger setup here, so nothing has changed in the last few weeks. Moving to the Australian dollar, US dollar, this market has actually hit a target recently. It was a daily target that we identified a few weeks back. That was the 79.48. The first target was hit last week. Price still hovering around that level. So if we see strength in this market, there are two levels that we want to watch. One is the full 50% into the next measured move of the sequence here, and the other one will be an extension short from on the daily here, recent lows to lows. This level has traded already, and we either consider this level or we extend it, also considering the dollar index might be turning here, and that gives us the two levels, the 78.15 and the 77.46, where this market could encounter new selling pressure. The euro dollar has still moving laterally here. We know the reason is because of the presence of dump money, which I don't show in this review, but it's something that I consider in my trading as well. But this review can be enough, and it's usually enough for to take profitable trades here. So one of the scenarios I'm looking for in this market is either a potential retrace of the 50% here. Now, I'm really looking for something like very similar to October here, where the market came back, kept moving lower, and then came back into the 50%. So this could happen again. We just need to understand whether you're going to see lower lows here before the market gets into this 50%. And note how this 50% also lines up with the larger 50%. They actually are in the same area. Okay, so we could see, depending also on what the dollar index, whether the dollar index retraces or not, we could see this 123.48 trading this week. If not, we could see a little bit more weakness in this market, and then possibly a 50% short come into play as well. So this market has been leisured for several weeks, and that's what is required to change actually to change direction. Tops are never points in time, are always processes. Let's move to the pound here, and this market has been stronger, relatively stronger than other markets, showing a recovery of the currency against the other currency. So last week this market came on Thursday to trade the 50% long, and there was a big response on Friday. Friday was typically a profit taking for it's typically a profit taking for all the markets. So you will see prices actually retreat or retrace some of the distance due to profit taking. But this was also 139.78.80 here was also 50% long, and this is a valid level which could actually keep pushing this price higher. Right, so that's something that we need to keep in mind. There is a long setup for this market on the daily time frame, and this market could continue higher despite strength in the dollar index. On the other hand, US dollar Canadian dollar, you remember that there was an important development in the last few weeks here. We had an extension highs to highs that held, pressing to that first target, and then the next one failed, and the market came to trade an extension short. It was the notable extension here, lows to lows into the first target. So the next measure move, if we get a retrace in this market, is going to be into the 128.90. Now what is important is that this market has not just reversed a random levels, but within a specific short area here that was defended, which means that this market has targets below as well. Okay, and if this is a range, you know, there are a number of levels that we have to watch that have not come into play yet, but because this is a range, it's also possible the market retraces all the way down in the at the bottom of the range. Okay, so US dollar Swiss franc on the other hand has been on a sequence of measure move higher, now testing that 50%. We saw some weakness last week due to profit taking, as well as testing the 50% short from the highs in November here. That's what we saw in this market. Okay, so there is also there was also a very good sequence, very technical market, very good sequence of measure move higher, lows to highs into that first target, and then the next measure move also came into play, lows to highs, and brought price into that first target as well. So we have two options here now: either the market comes into the 50% and trades the new 50% long, and that would be a very good trade, also supported by dump money, and that will actually bring price into 96.98. So that could be, if we see 95.40, it could be the trade for this week in this market. Okay, but we need to see this level, and this level needs to test positively, which means that we see participation there, and there are very different techniques to do that. One of that is the FibStalker timing, which I teach in my FibStalker Management Coaching program. but there are also other dump money based methods to enter these levels, and I teach them in the Fearless Trader workshop, which I started last week. Right, so if you want information about this coaching programs, just let me know, and I'll be you can contact me by email or in the room, and I'll give you more information. The next market I want to look at is the US dollar Japanese yen. US dollar Japanese yen has been relatively weaker here, but it too had a long setup. Now, the long setup that we saw last week here, beginning of April, was not sufficient, was not strong enough to bring price into that first target. So we either see this target hit this week, and in any case, we could actually see a retrace into also the 50% within this move this week. Okay, so we need to keep that in mind. The 107.74, which is a level that is just above price here. Remember that level and that area, it's an important area which is going to be watched by dump money short. On the weekly here is the 107.74. On the daily we can trace it from the lows in November here to lows. Okay, that's a level to keep in mind. That could be the end of the move higher in this market. Don't forget that this market did not move out of value 50%. This is all profit taking, and of course strength in the US dollar, but it doesn't mean that this is necessarily going to reverse completely this market. In fact, I don't believe that. As we get the market into this 107.80, we could see a renewed weakness in this market. And note also how, and I'm going to show this on the daily here, on the weekly, note how the this extension short here as first and second targets aligns up with the support level at 170. Okay, so if that comes into play, that's the possible play. So we're going to talk about talking here about 700 pips, and the market could actually keep moving lower into that level. Okay, so that's a very important information to know for this market, because you could see 100 area trading again. Strength in the New Zealand dollar that we mentioned last week. It was trapped between two areas, an area of measure move longs here, then extension long that was expected once, twice, 3 times, 4 times, and has pushed since price higher. And the short was 50% short here, from highs to lows, that has held in March and was capable of getting a reaction lower at the beginning of April here. Now, when we look at this market, we can also see that the 50% long has held within that area, and usually in a sideways, 50% do not hold. The fact that this 50% has held might be important, and the first target is well above that 61.8% level, 73.27. Last but not least, it's the market that I use as a proxy of the dollar index, and this market too has been moving higher. The open here on Monday has been lower, and we will see whether this market will catch up with the dollar index as well. It's been relatively weaker than the dollar index. As you can see here, there is a 50% that we knew already. That was the 50% from beginning of March here to mid-March, and that has pushed price lower. Price is then since then, the activity of bear was not enough to push price lower into 130.35, and the market reacted. But as we can see here, on Friday, on profit taking, this market has respected the level as well. So what we want to see, it's actually going above that 61.8% level, the 132.09. Okay, so this is the first part of this review. In the second part, I'm going to look at select market and the opportunities and what's happened from a technical point of view on those markets and the opportunities in those markets. Thank you very much and see you later. Bye bye now.